It's Monday, March 23rd, 2020. We're starting our second week of online classes at Marquette University due to the coronavirus or COVID-19 epidemic. I'm going to quickly talk about what the impact has been thus far and what's next. I'm certain that you've been staying up with the news about coronavirus. It certainly has a wide impact across the country and the world. We're still in the early phases of the epidemic. The numbers are growing rapidly. New York City is being hit especially hard, but it won't be long before the other major metropolitan areas suffer the same types of numbers. Everyone should stay healthy. This is a very challenging time. The stock market is down well over 30%, some instances nearly 50%. We'll watch this closely. We'll continue to manage our portfolios and stay fully invested. And I'll be sending out to you frequent emails about how we're going to be handling the management of the AIM funds and our classes going forward. Let's quickly step back in time. It was a little over a month ago when coronavirus was working its way through China that I first put a LinkedIn tweet posting as well about the impact on jobs. By early March, I was talking about how important it was to actively manage investments. Holding just blind ETFs or passive index funds was going to be harmful, and how it was advantageous to hold actively managed funds that were able to avoid energy stocks, transportation companies, things like cruise lines. While it seems like months ago, it was only 3 weeks ago that we began to see the closing of major events, such as South by Southwest. And already then, some universities were hinting that they might suspend classes for a few weeks after spring break. Because of the fintech class that I teach, I've been very mindful of what's happening with payments around the world. And already 2 weeks ago, we were starting to see major swings of less consumer activity, lower payments being funneled through the global payment system. It was only 10 days ago that we saw the World Health Organization and the UN declaring coronavirus as a pandemic. Again, it seems like many months ago. And it was the Thursday during spring break that Marquette came around to finally canceling classes for a month period of time following spring break. Again, staying with the fintech theme, watching Visa, MasterCard, and other payments companies report significantly lower consumer activity. We were already aware at that point about a week ago that this was going to be a major hit on the global economy. The growth of contactless payments, in other words, avoiding the use of cash, was being pushed by the World Health Organization and the United Nations, again strengthening the growth rates of contactless payments such as Apple Pay, Google Pay, Samsung Pay, etc. About a week ago, we began to see the major shutdown of restaurants and other retail establishments, signifying the growth of e-commerce and the importance of finding ways to deliver goods and services without physically coming into contact with other people. It was just a couple of days ago that I sent this message out that I think that there's opportunities out there. Not necessarily that we're at the bottom, but there are some incredible buying opportunities that are about to present themselves in the stock market. Again, here's some ideas. Companies like Square and others that operate in e-commerce and in the fintech space could be very attractive companies over the course of the next couple of years. And finally, we're starting to see other companies like M-Pesa and others around the world attracting significant following through the use of e-commerce and fintech contactless payment cards. Truly a trend that we're going to see more of in the next several years. And finally, today, here was an article that I found particularly interesting. It showed the stocks that the senators have been buying and selling since they received the intelligence reports about a month ago about the impact coronavirus would have likely on the overall economy. This last slide is one that I found yesterday. It reports those areas of the United States where we're likely to see the biggest jobs impact negatively as a result of coronavirus. In particular, the tourist industry and the energy industries are going to be hit hardest. Well, that's it for now. Good luck. Stay current. There are a lot of things happening with coronavirus, obviously in your life, but as well as the overall economy and the markets. We're finance people, so we need to pay attention to this. Take care.